Hello, traders. It's 8:02 a.m. Chicago time on the Wednesday of 27th of June, 2018. Thanks for joining me this morning on another Trader Bite. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The market had a quick turnaround this morning at about 6:45 Central, 7:45 Eastern. POTUS, the president of the U.S., released some comments about the fact that they're backing off of this, or they're changing their stance on the investment environment in the U.S. They want to keep it open, but they want to make sure China is responding to their demand that U.S. technology theft ceases. The president has decided against the harshest measures on China, and that basically caused our S&P minis to pop up from 2712. The last print was 2712. That's the scene of the crime, or the SOC for this move, all the way up to 2735-ish, 3375 for the overnight high. Pretty solid rotation there. Just 21 points. As I said many times, this market is very, very news driven currently, and that's where most of the power comes from these days, is jitters moving to safety, moving back to risk, and really the overnight session was shaping up to be a standard continuation session after an impulse down with a balanced day, which was yesterday. This blows my homework a little bit out of the water, but that's okay. I always welcome volatility. The market stands currently. The leader of the pack is crude oil. Crude oil just tearing it all up. Got as high as 71.40 on a WTI and is up 1.13%. Crude oil's just on a tear up. There was news yesterday on Iran that the U.S. State Department is asking the U.S. allies to cease buying from Iran by November, I believe. And then Saudi Arabia came in and said that they can throttle up their output to make up for that. The expectation was the pop higher on the Iran news. You know, that's supply that's coming out of the pipe. And then the Saudi news was expected to push it lower, but oil just shrugged that off and continued higher, and it's continuing to do so this morning. Gold is off. Mostly the market's allocating to risk this morning. The negative, the products that are underneath settlement this morning in the futures are safety assets, the cable, the euro. The Russell, curiously, is down 3.5 points. That is a risk asset. The S&P up 2.25, but the S&P was down as far as 2705.50 in the overnight session. So it's made a pretty decent recovery, almost 30 points higher from the low. So that's how things are shaping up. As far as what could interrupt our flow this morning, we did have some key releases. I'm not going to go over those. You can look them up. But look, going forward, we do have pending home sales at 10 Eastern, 9 Central, expecting 0.5 for May, and we're expecting crude oil inventories today. Okay, I'm going to take a minute after I'm done with the scenarios to talk about just a little bit of trader wisdom, to talk about quitting trading, an important topic, of course, as folks have bad days and they contemplate taking off and just cutting the cord. which may be the right decision for you, not sure. But I just want to highlight a couple things that lead up to that. Let's take a look at yesterday's scenarios just to follow our routine. Yesterday, the primary scenario was for us to test higher, was looking for test into 3150 and then failure, and for the market to actually trade the entire value range from Monday's sell-off. That did not happen. The secondary scenario was for it to drift lower down through the entire value range and then to come back up and hold steady at the point of control. That did not happen. The third is an open test drive lower with an impulse to test the prior day's low. That did not happen. My fourth scenario didn't happen, and my fifth scenario didn't happen. Yesterday was a combination of one and nothing. Here's what actually played out. A wide open auction on in range. The opening swing yesterday was almost 10 points before it returned back to the open. So we pushed to 28 early, dropped to 18 and a quarter, and came all the way back to the opening print of 27, 25, 75. And then we just basically hung out in the opening swing. We extended to 30.50. 31.50 is was a key stock zone. Nice area up there. And once it pushed to 30.50, it extended the IB down. So now we have a range extension down. The market's starting to show cracks and its ability to go higher. So we're looking to the short side, but nope. Comes right back to the middle. The middle is also VWAP, which is at the time was also the point of control. So that takes our hand off the mouse a little bit, because when we have those confluences, it's saying that we're likely to trade from the outside in, which is what I was looking for. So I had a stock zone here at 20, and it pushed through by a little bit. The goal is to trade from the outside in, and then it pushes the IB high to 31 and a quarter. Remember, 31.50 was a key level from Monday, stock zone from Monday, and it just consolidates and then finally squeezes and comes back in and then trades inside and holds inside the IB the entire time. VWAP and mid on top of each other, and then on top of the point of control as well. Complete balance day, which is fairly common for a day after a trend day down or trend day up, is to have a balance day. The market sprints one day, and then the next day it tends to rest. It oftentimes, at times, if it does open near that extreme of that trend day, it'll extend that auction a little bit, test and fall back in and go into balance to coil or consolidate for the next move. Yesterday was a consolidation day. A Gaussian profile, bounce profile, finished in the middle, so neutral, normal day type. The overnight session built the point of control on top of the yesterday's value area. Notice the point of control of yesterday, this area here, is right inside of the value area of the previous day, further indication of balance. And this is how we ended up. So it's an interesting day because we had pretty good range yesterday. We had 18 points and 1.13 million contracts traded. If you look at, and we discussed this in an impromptu yesterday at Convergence, so if you're a member of that, you'll get the video this morning. There's a very interesting way in how the market traded yesterday. Basically, small lots, which I define as 4 lots or less, were really quiet most of the session yesterday until the European close, and then they started to become buyers. Most of the session was driven by folks who are trading greater than 4 lots, 5 lots, or higher. And you can see that the delta, this is the total delta, mimics the large lot, which is this white line. This is the S&P price. This is the actual S&P chart. And what you see underneath is how delta moved, volume delta moved around. So there was a lot of volume here that went through yesterday, even though it seems like we didn't really go anywhere. We were in balance. So that's how we finished yesterday. How did we do on the reopen? This is the overnight session. We basically open right where we closed, and we test down, we test up, test down through the Asian session, and then the Europeans come in. Those darned Europeans come in and sell. Okay, till we test 2705.50, and then we break higher on this Trump news. This big white bar right here is Trump news. And since then, complete and utter consolidation. So far, this is a 15-minute bar chart. We've just absorbed the news, and we are sitting around with our hands underneath us, waiting for what's going to be said next by China or somebody else. The market doesn't know how to price these things in. We did extend our high by a little bit. The high this morning was 32.50, and we extended it to 33.75. Looks kind of bullish. The overnight inventory is mostly short, and it's been rebalanced now, and we are in balance. And the profile, the overnight profile, shows a clear double distribution. A clear double distribution. So it's 27.21 is a key area to watch right here. This morning, as long as we hold above it, the expectation is that we're likely to tackle yesterday's high, which was 35.25. Okay. Our scenarios. So as we look at what it has done, we did gap down. We continued lower. We do have a gap zone above. This morning, the expectation is for this to start drifting down. I expect even though the auction got interrupted by the Trump news on investment and trade, the expectation is we're likely to shift back into yesterday's balance. I'm expecting us to hold, retest. I'm looking for an impulse down. I'm looking for yesterday's low to be breached this morning. So I'm looking for it to ride through that 21 and to push lower before settling down. So mostly my primary scenario is looking for selling. The secondary scenario is one where we start to move down. We look for the point of control. We do get an impulse up, and then we start to drift up as this news gets around and becomes absorbed into future expectations on investment prices and stock prices. And if that's the case, then we are likely to take back much of what we did on Monday, and the target becomes this 2746 area. 2746 is the big key low volume node in the area, and that would be the key target on scenario number 2. I'll leave you with those two scenarios. Now remember, really, you should work out your other scenarios, your trend scenarios, because we do have a balance day after a sell-off day. So there's likely to be some pretty good movement once we break the high or the low of yesterday. We're likely to see some pretty good flow coming in. Okay, so I'm not going to go into the scenarios further. The last thing I want to talk about this morning, just a little bit of trader wisdom. Um, I got a message yesterday from a Convergent Trading member, somebody who's been around for some time at Stage Five and so on. And this person wrote a note. They shall remain anonymous, saying that they've just have had a fantastic time following and doing what they've wanted to do with trading. But he says, but I have to quit. Also, I'm closing my trading account. I did make progress and learned a lot, especially during the last months. But still, I'm making stupid mistakes, so I have to do an emergency stop right now. Lost 20% with one trade after doing okay. Good. Meaning I could pay for all my expenses and be green for weeks. I gave all that up in one trade. 20%. Okay. Also, thanks for the book recommendations, Chimp Paradox and Mindset. And he says, maybe he'll come back sometime in the future, but for now, he just can't take it. I cannot tell you, although I understand what this person's going through, and this is very, very common. It infuriates me when this happens. I mean, it's human nature to do this, but all the talk that I've done of risk and understanding your trading plan and putting risk first, risk, it's to avoid this scenario, to do so well over a period of time and then to just blow it all up in one day. It's really aggravating. I did have traders in my prop shop that would do that. They would violate their daily loss limits and just give up a week in just a trade that they defend because they believe they're right. It's just not the way you should trade. That is gambling. And so this person was probably near the edge of quitting anyway, although he said, Convergent's been around for 3 months. He says he's done so much better in the last few months. And was covering their expenses and was green for weeks at a time, which is a great accomplishment. This business is, trading is tough. It's not complicated. You don't need to complicate it, but it's really hard. It's not easy. And you can layer in just a lot of difficulty by disrespecting or ignoring your risk limits. Now, I'm not speaking of this person individually. I'm not singling them out, but I know this is pervasive in our business. They're just people who believe that it's just worth it to risk it all on one trade. It makes no sense. This is no different than putting your seatbelt on every time you go for a 5-minute drive to the grocery store. You put your seatbelt on. I mean, heck, you have your helmet on in your car. But then when you go and hit the highway and you're on the Autobahn, that's when you take your seatbelt off because you got tired of wearing your seatbelt because what the heck, right? So it's just the time, it's inevitable, it seems, that the time when it really matters, that's when people let go of their risk. It's when you're on tilt, when your mindset's just not there, when you are fighting. That's when you should become much more aware of your risk and much more aware of yourself. And what people do is the opposite. Now, this is human nature. This is the chimp mind. This is the monkey that's within. We want to fight. And what are you fighting? You're fighting the rain. You're standing in the middle of the rain and it's pouring on top of you and you're fighting it. You know what I suggest? Get out of the rain. Step aside. Accept that you're wet, but don't get more wet, So I just wanted to say a word about this because I see this all the time. I get emails I've gotten probably over the last 10 years that I've been online and exposed to the public. I've probably received a few hundred emails saying, man, I've clawed my way into, doubling my money in my account and it's been great. And then yesterday I just pissed away 6 months of progress because I just kept adding with my awesome $500 margins for the ES. I just kept adding in the market. And then I puked them out, 2 points from where the market's going to turn. Well, that's not trading. You're not a trader at that moment. It's not trading. It's not trading. You're gambling. You're playing. Don't call yourself a trader if you're going to do that. Okay. Again, not to pick on this particular person. They're not doing anything different than what I've done in the past, except I was funded well enough that I could survive it. It's no different than what everybody here has or will do at some point to learn the lesson. You need to protect and defend your risk. Your trades cannot all win. It's impossible for you to be a winner all the time. There's a lot of leverage in futures, so you're going to risk a lot. Okay? So just understand that you're going to get a loss. Take it. Take the loss. Just take it. If it's outside of the parameters of your trade, take the loss. If you can't take the loss, then you have no plan for the trade, and you shouldn't have been in a trade in the first place. You know what I do when I find myself in a trade that I shouldn't be a part of? I just close it. I try to scratch it, but if not, I just close it. Close the damn trade because it's not yours. It is not your trade. But to give up more than maybe 1% or 2% of your trading account, if you have a small account, on a given trade is insanity. Your probability of ruin is very high, and that's with a very high confidence level. Statistically, run a Monte Carlo on that. You'll find that it just plummets all the time when you start to take these bigger percent risks on your account without an offsetting high percent return on your account, which is not how I trade, which is really difficult to do in day trading. So don't do it. Anyway, 5-6 minutes of the market. I'll stop preaching, but this subject here, I just don't like seeing people quit, because trading is really a great way to be. There's a lot of independence there. However, trading is not for everybody. I'm not going to cite statistics about how many people don't make it, because I think that's absolute and utter bullshit. These statistics where only 2 out of 10 traders make it or whatever that they get from brokerages, it makes no sense. That statistic doesn't make any sense to me either, because you know what? If I read a few books and I went and did surgery, open heart surgery, well, 9 out of 10 patients will probably die also. So I can't call myself a surgeon if I'm not approaching this in an appropriate way. Okay? So, are you a trader? If you are, then your first order of business is to define, when do I engage with the market and how much risk am I willing to take to get 100, 200, 1,000 trades off so I can realize my edge. Most people get to maybe 20 trades and then they quit. That's not enough of a sample. You're risking too much. That's not enough of a sample to actually find out if your edge shows up, right? People make a ton of money simming. And they promise, yes, I swear, I follow my plan exactly, and I make money simming, and then I go live, and it just explodes. Yes, because you're not allowing yourself the opportunity of many, many, many samples so that your edge can show up statistically, and that's the goal. It's a random outcome for every trade. Your edge shows up over a large sample, period. And you cannot get to a large sample if you're risking 5, 10, 15, 20, 50% on one trade. It's sheer stupidity. I'm sorry. It is just dumb to do that. Stop. Okay? Good luck.